Ladies and gentlemen, distinguished audience, very good morning. I'm honored to participate in this annual conference, and I'd like to take this opportunity to first thank the organizers of FinTech Americas for the invitation to speak in here. I'm sure that we will be hearing great insights from the practitioners and the experts participating in this conference on development areas related to fintech practices, as well as the increasing prevalence of financial technologies in our societies. In my short presentation, I'll attempt to shed light on some developments in the digital field, both from a global perspective and MENA region. I'll also make some notes on important digital initiative in the Arab region, namely the Arab digital economy, and I'll conclude by picking on a successful country example in the Middle East, and ending with some key recommendations for policymakers. All right. Surely there is a growing comprehension world over on the practice domains of fintech capabilities in terms of its agile and innovative business and delivery models, and its capacity on improving process speed and efficiency, and as well as lowering cost of operations and enhancing customer journeys and experiences. Looking at the global market size growth of fintechs, we can surely depict the rapid progress of this industry. In the last 5 years, we had an enormous 4 trillion increase in total transactions value. And this is expected to even increase by trillions in total market size in the coming few years. We also see snowballing international interest to develop platforms to digitize payments and remittances, with banks gearing up to leverage fintech solutions. According to international estimates, global digital payments is forecasted to grow from $4 trillion in 2019 to around $5.5 trillion in 2020. Surely COVID-19 will also have a profound impact on pushing this figure even higher. Although the current values and estimates doesn't depict what is actually happening on the ground, the chart, for example, on the screen, show variances in countries and regions in terms of capital investments in this growing field of business. Clearly, Middle East and Africa and Latin America's regions have relatively low investments, which illustrate the kind of potential of growth we may expect in the near future. We highlighted in our recent studies that fintech industry still didn't reach its average balance in the Arab region, and especially that the governments and financial institutions in the Middle East don't realize fintech as a means of differentiation and gain winning. The same applies to Africa and Latin America, for instance. Let's look at this chart. We see that the majority of fintech deployments focus primarily on money transfers and data aggregation services, and less or no focus on the overall ecosystem. Customer engagement in the region is still around 30% at its best scenarios, with primary concerns related to trust and security and lack of understanding both at individual and corporate levels. With the current health crisis, it's becoming imperative to find more innovative financial instruments like fintech to support economies of both developing countries and underdeveloped countries, be it at macro or micro levels. One interesting findings published some time ago points to an important indicator of a regional market trends, and that when countries are technologically and economically advanced, an important property that distinguishes them is that they have greater proportion of business financing than loans of individuals. This is where fintech is coming with a promise to play a paradigm shift role to flip the two sides and offer tailored banking products to suit the needs of small and medium-sized enterprises. This, in our opinion, is a critical window through which we need to look at fintech, especially that micro and SME enterprises play a major role in most economies, where most formal jobs are generated by these type of enterprises. Looking at the massive opportunities opened by digital, at the end of 2018, we released a strategic initiative to support digitalization of socioeconomic systems in the Arab region. And also, we are working on expanding this to cover regions in Africa as well. Part of this roadmap that consisted of 50 strategic programs, we addressed FinTech from 5 different dimensions of digital transformation, the role of governments from a legislator and end user perspective, digital business ecosystem needs of the private sector, citizen centricity and innovation development, with a clear focus on digital inclusion and financial inclusion. According to our studies, it is believed that the FinTech industry in our region can grow at least 10 times within a 5 to 10 year period. Besides, in the recent Digital Economy Index that we released 2 weeks ago, we found great variances between countries in the region, despite the strong appetite, particularly by millennials, for digital solutions and services, part of which are FinTech solutions that are preferred to be offered outside the traditional banking domains. We also found that there is a great potential for FinTech to address the unbanked population and underbanked population in the region, which exceeds 80% in countries like Egypt. We are also of the belief that shining stars in the region, like the UAE, which is ranked first in the Arab Digital Economy Index and rated among the top world examples in FinTech practices, will push the region into this global race of digital FinTech adoption. What distinguishes UAE is that it has set long-term visions like the UAE 2021 vision and UAE's next 50 years vision, and supported it with multiple initiatives like the AI, blockchain and innovation strategies, which altogether shows the country's ambitions to strengthen its position in the global economy. As a matter of fact, UAE has spent generously in the last 20 years to develop world-class information and communication infrastructure with a focus to establish a competitive and entrepreneurial environments both in public and private sectors. An important initiative that supported its digital transformation plans was the setup of a world-class identity management infrastructure that was designed primarily to support virtually operating environments. This was achieved through an online identity validation platform that was offered to both government agencies and businesses to establish customers' identities with government-operated KYC validation process. This infrastructure supported the financial market security and stability, as well as the government mandated linkage of individual identity credentials to all financial transactions, be it a logon or opening a bank account or even transferring money. An interesting initiative that the UAE announced a few years ago is about the mobilification concept to offer KYC of mobile users and digital transactions using digital identity certificates and biometric authentication mechanisms on mobile devices and phone SIM cards, for example, where people will only need a mobile phone to complete end-to-end digital transactions. Also, financial institutions in the MENA region in general have announced massive investments in the digital banking services, which included revamping major backbone support infrastructure. But from my personal observation, still they are facing challenges of deep-rooted bureaucracies to accept the new norms of the digital age. Despite that, banks have been very active with large investments in digital transformation initiatives, which was sustained with hierarchical changes to transform backbone systems and customer-fronting services. Recently, many digital services were announced, from online bank accounts opening in few steps to connecting to digital payment methods like Apple Pay or using robo chatbots to upgrading ATMs into interactive machines and so on. Interesting applications to mention here is that of the cooperation happening between government agencies and commercial entities like banks to use existing national infrastructure like facial recognition to speed up the KYC process. We believe that such developments, together with the global trends, will open up and pave the way for wider FinTech adoption and not only in the MENA region, but world over. I'll conclude here by shedding light on some of our policy recommendations that we have highlighted, that emphasizes on a couple of pointers that need to be taken into account by the governments in the region as well as the business domains. Firstly, financial inclusion needs to be tackled as a national priority. This is an important building block of digital societies and the fuel through which economy relies on to grow. This necessitates comprehension of the overall digital ecosystem and how the different components like FinTech fit and relate to each other. This also requires governments to shift from current enormous yet complex roles and forms to more dynamic and agile operating models. This should be achieved by letting the private sector operate and grow with lesser interferences from the government. This is a vital sector that needs to be revived and supported to address economic diversification needs in the region on the one hand, and also to pass through the consequences of current health crisis on the other hand, and also to play its role in creating jobs and creating new economic opportunities overall. Third, it's of significance for governments to create responsive and regulatory frameworks. Studies clearly show that fintech is most prominent in countries with less stringent banking regulations. We realize that banks in the region have been protected somehow by current legislations, which justifies their somewhat passive role, and also explain the low uptake percentage of startups and SMEs. There is also a need for regional collaborative approaches and investments in innovations. If we look at the market size like the US, that has 300 million plus population, and compare it to individual countries in the region, indeed the feasibility and impact would not be as sound. However, with the suggested collaborative approach, the market size will be more appealing and more attractive to both regional and international capital investments, especially through crowdfunding platforms. Generally speaking, crowdfunding is still unpopular in the region, although of its importance in supporting startups and the overall economy. Last but not least, we also believe that the financial institutions need to pass through existing battles of keeping the old legacy luggage with a radical shift and open mindset. There are gigantic opportunities indeed for banks, both in current environments as well as in the near future. But let's remember this, the competition game is not going to be as relaxed, with players like Google and digital platforms delivering banking experience. Just a last word as I come to an end of my presentation. Indeed, the world post-COVID-19 will bring us all to new norms. One element that will determine the degree of success of both countries and institutions will be dependent on how well they can maintain a clear vision and adopt rigorous and resilient yet innovative approaches and solutions. Winners will always be those who will be best at adapting and who will strive to create rippling effect in today's global economy, which is dynamically changing. And remember, COVID-19 outbreak is and will make the pace of change and transformation even faster. Thank you very much for your patience and listening. I hope you enjoyed the content of this presentation. I hope you also to keep well and stay safe. Thank you very much.